perhaps now we can take the holistic view, and maybe we'll just cast your mind back to when you first started. What was the investment philosophy, and why was it small caps that you were focusing on?
The investment philosophy hasn't really changed. Our idea is we seek to identify a business that we think has a likely and, more importantly, probable long-term growth pathway, i.e. its revenue, its earnings and its free cash flows will augment over time, because that's what really drives the intrinsic valuation. So we want to invest in those types of businesses. But importantly, we will only deploy capital if we identify one of those businesses if the market value is significantly lower than the intrinsic value, what we consider to be the fair measure of value. And so in order for us to invest, we need to have the intrinsic value at a large premium to where the current market value resides. And why do we invest in small caps and micro caps? Because they have intrinsic value growth typically at faster rates than their large cap and mid cap. So over the long term, it is a true generalization that small cap companies and micro cap companies will outgrow large cap companies. Another important attribute about small cap and micro cap companies is that a lot of the growth that they engender is company specific, it's business specific, it's not based on the prevailing macroeconomic cycle. So you can get businesses that, because they have a new product that's in the early stages of the life cycle, or they might have a market share gain, or they might be expanding geographically, both internationally or nationally, their growth is dependent on company-specific factors, not the prevailing macroeconomic climate. So it is an asset that you can own independently of the macro environment, and that's exciting, because what we're doing is we're parking long-term capital. We're not buying a business with a view of selling it in 6 or 12 months' time. We're buying a business because we think, A, the business is worth more currently than the market thinks, and B, this business is growing, and in 5-6 years from now, its intrinsic value is going to be far higher than what it is today.
I think that's what some people underestimate, particularly when they're new to investing, right? The compounding of intrinsic value, not just necessarily the share price, but that compounding is so important to focus on.